Good afternoon, George Cavaligos, Rates FT Bonds. How hard is this stuff? It's unbelievable. Third reversal day in a row. Big outside day up in the 10-year note. Bonds minor reversal day. We did not take out yesterday's highs like the 10-year did. Short end very well bid all day, closed right on their highs. Bonds closed sort of on their highs. Ultras sort of on their highs, but you know, the highs that were made earlier in the day in the bonds and ultras were not exceeded. So we're seeing the curve steepening, and that's a little bit worrisome for somebody that wants to be bullish the bonds here. We're still in some kind of bigger corrective phase, I think. You know, the fact that the 10-year did not make new lows was a bit of a warning sign, you know, as the bonds were making new lows this morning. I'm going to label that bond low an irregular B wave now and continue to look for some kind of a corrective rally here over the next 10-11 days. It's going to be tough. Next week's the refunding. 3-year notes on Tuesday, 10-year notes on Wednesday, and the 30-year bonds on Thursday. It's going to be a difficult row to hoe, but everything seems to be pointing towards further corrective upside action here. Okay, next, what's the plan? Well, 10 years took out yesterday's highs, but they did not take out Wednesday's highs. I think we got within a half a tick so far at 126.20 was the high from Wednesday in the 10-year. Bonds are way below their highs from Wednesday. I think it was 134.08, something like that, up there. We're quite a bit below there right now. I want to see Sunday night if we can get some upside follow through. I want to see a trade above these recent highs to confirm some further upside here. I do think the market's going to work its way higher, but it's not going to be easy. Look at what the last 3 days have been. And I'm going to continue with this quick hit kind of trading scenario of buying dips and selling the rips higher, and hope this time it can, you know, give us some follow through again. I think this time it will. You know, yesterday's sell-off was a problem, but, you know, again, we're going to see, you know, like I said, I think yesterday in the webinar, you know, if you look at like 10 economic numbers that we get each week, you know, 6 or 7 of them are stronger than expected and 3 or 4 are weaker than expected. And depending on which 3 or 4 are weaker, like the non-farm payroll numbers, obviously the granddaddy of all numbers, and it was weaker than expected by far. Okay. Have a great weekend. Get some rest. Next week isn't going to be a lot easier than this week. Have a great weekend. We'll see you guys on Monday morning, bright and early.